Okay. And we are live. Welcome everybody to another episode of the Bootleg Weekly podcast. Happy Monday. We're running a little bit late today. Well, we have a later show, late night bootleg. Ron is on his way, I hope. He will be here at some point. I think he's running maybe like 10 or 15 minutes late. But I'm here. And I'm sure when Roy gets here, all we're going to be talking about is Palantir's earnings. So I thought I would just keep you guys to myself for the few minutes I have you before that. Let's see who's here. Got a bunch of people here. George is here. We had one of the best days in the market, man. This was one of my best portfolio days. It was a double-digit day for the account. It was a really fun day, actually, six-figure day for me. We need a new feisty name for the Monday show, similar to Fiesta Fridays. June says, any good suggestions? Yeah, throw them in there, and if we feel like it, we will change the name. I don't know why this is coming undone. Um, yeah, let me know if you guys also had a similarly strong day in the market as well. Zach says, if we get a green run into the Toronto meetup, I'm gonna have to buy Tevis a drink. Yeah, dude. I mean, if we get a green run, I might end up buying you drinks. so, um, just a few more of these days is all I really need to stay in the game here. Bootleg doesn't have flair. Yeah, we're happy to change the name. Zach says, it was the one day I had a golf tournament all day to find out I was up 10% by the end of it. And yeah, I think Roy ended up doing like much better than I did today. I mean, I did well because of Nebius CoreWeave. That little trade that I did I mean, it worked out as well as, I think SoFi was also up like 9%, and Amazon and Meta. Wow, those are doing really, really good for the portfolio. But I think Roy had like air test systems. Palantir just completely killed it in after hours off the back of their earnings. And yeah, I think it was just a strong deal around. Hold on, let me bring up my screener. So yeah, good stuff. Everybody was substantially green. Moonshot Mondays. I kind of like that name. We'll run it by Ron when he gets here. Really happy to be here and chat with you guys. We are thinking about moving this to Tuesday, but then I was like, you know what? Let's do it a little bit later. I think Roy's still in like meetings with his actual job, because both myself and Roy work for a living. We're not like the Tanners of the world where they can just do a stream full time. Moonshot Monday has a nice ring to it. Palantir. Yes, we will be talking about Palantir tonight. We will be talking about whether we're back or not. Let's see. I mean, the AI names is one of the topics for sure. SoFi. Roy and I both had a chance to chat with SoFi's IR team. I chatted with them earlier today, and I'm going to be making a video around some of the questions that I asked them. And by the way, I posted this on X as well, this thread around, what would you ask SoFi's team if you had the chance? And guess what? Some of the things that you guys suggested in that thread were some of the things that I ended up asking them. So stay tuned for that video. Maybe I'll end up making it after this live stream if it's not too late. I got to go into the office tomorrow, so I got to go wake up a little bit earlier. But yeah, banger of a day. Ready for the SoFi tacos. Yeah, I don't know what. Oh, if it hits $20 tacos. Yeah, I don't think that was like a permanent bet, but hey, man, I haven't had tacos in a while. I could definitely go for some of those. Yeah, Roy is going to be here momentarily. He said he's going to be here in about 20 minutes. I'll just say I'm already live. All good though. Take your time. All right, so we don't have Dr. Roy here for the first 30 minutes of the show. So that means that all you guys have is me rambling on. Yeah, I think SoFi is definitely an interesting case, up over 10% today, crossed $18 per share. The market's going risk on, right? And I don't know, if you look at rate expectations, right, with this new deal, if it sticks, then obviously that's gonna be good because we don't wanna have a rate hike in September. Interestingly enough, speaking with SoFi's team, like, they mentioned some pretty interesting pieces there around whether they look at the macro, what they're guiding for right now, like what are some of the assumptions in their guidance that they're having moving forward. So I will make a full video about that, but I basically asked them like, hey, look, what are the underlying assumptions that go into uh, this guidance? Because you guys had two rate uh, cuts and then you moved to two rate hikes as your baseline assumption. Like, obviously, the underlying mechanism has to change for you to be able to hit that guidance. And they talked me through that. I asked about the taxes situation and whether that 22%, was something that we can expect going forward and how we might model that in. Um, I asked about the SoFi Plus numbers, big business banking. I asked about the tech platform and what that ramp is going to look like to that 325 million that Crystal Point was guiding for at the beginning of the year. I did ask about buybacks, uh, and the answer was really interesting there, whether or not they're thinking about having share buybacks. So all of that is going to be in a video that is going to be coming very soon, possibly tomorrow. Stay tuned for that. If you want to know whether SoFi uh, has buybacks or what they're doing and how they're planning their upcoming quarters, then yeah, stay tuned for that. Zach says, it's so rare I get to see these live. So happy to be here in real time for once. Thank you, Zach. Looking forward to meeting you in Toronto. It's going to be really, really fun to just meet everybody there. Uh, yeah, exactly. Real job sucks. I was working until like 6 p.m. and then Roy, I think, has like meetings and stuff today because it's like he has like a board meeting or once a quarter type of thing. And so he's still in those. It's kind of crazy also like doing these streams around your normal job because the persona, at least for me, I won't speak for Roy, but at least for me, the persona I have in my regular job versus the persona I have with you guys on these streams is drastically different. Um, I'm like unrecognizable in my job relative to how goofy and like aloof I am in these streams. So just turning that on and off, I think is sometimes challenging because you carry a lot of like your work stuff along with these streams. But at the same time, it's sometimes refreshing because it's a change of pace. Like if I was doing this job full time all the time, I don't think you would have the same type of attitude or approach to it because I would be more dependent on it. Let's see here. Yeah, my 17 shares of SoFi got crushed. I don't know in what universe, man. Um, yeah. Are we back? This is the question. This is the main question. Are we back? Does somebody have a direct line to Citadel? Because they are pretty much the only ones that know. And in fact, Citadel came out and they were like, we don't see any issues in the market right now, basically saying we're back. And I'm like, really, mofos? You don't see any issues in the market right now? You guys who expected the Fed to be raising rates and we're spreading FUD around that. But I guess now they're long. So, they want to be able to ride that high. But another part of me, like the little voice in the back of my mind, says like, "Oh, if Citadel is saying we're going to go higher, it's because they want to dump their bags on retail." So I'm trying to be cautious with it. I think for myself and my portfolio, one thing that I'd be looking to do is potentially be trimming some of my positions, or at least writing aggressive covered calls, so that even if I get a reduced Nebius position, I can rotate that into something safer, right? Right now, for example, the Amazon position that I have and the Meta position, when you put them both together, Well, I have about 11% in Meta. It's my third largest position. And then for Amazon, it's about 8% of my portfolio. But I have the Amazon spreads, which are another 5% of my portfolio, at least actually a little bit higher even because they've been going up. They're up about 40% right now. So let me just do the math on that real quick. Yeah. So the Amazon spreads are about 4.5%, and the shares are about 8%. So I got 12%, 13% in Amazon, and about 11% in Meta. So a good quarter of my portfolio is spread out amongst those two names. And then another quarter is in SoFi, 25%. And then about 27% is in Nebius. So 3/4 of my portfolio are just those four names: Nebius, SoFi, and then the split between Amazon and Meta. And that gives me some relative buffer towards the volatility that I have in other names. Like if BMNR wants to go in circles, or if Rocket Lab, which is about 2.5% of my portfolio, which I just recently bought, and all of these other ones, I know that I have some level of concentration. And one thing that I'm thinking about is, well, do I want to be trimming some Nebius, let's say, to be adding some more hyperscalers, and or maybe even some SPY or some QQQ? I'm not sure, right? But I'm just being careful because I think I'm very heavily indexed onto the AI trade, especially now that I cut the now position. Without service now as a counterweight or as a hedge, the portfolio volatility on the AI trade is going to be something I need to look at, or something I need to address. Because when I had service now, well, if the portfolio went down, then service now would go up as a result, and it would serve as a hedge to the portfolio. I want to get rid of my VG position. VG is only about 1% of my portfolio. And it really was a hedge around this Iran war. But really, right now, uh, the market is not treating it as seriously as it used to back in February, March. Trump is like the boy who cried wolf. And so the VG position is not going to be as effective as maybe going back into service now for about 2 or 3% of my portfolio, just as a hedge to the rest of the AI trade. So that's something that's top of mind for me, is how am I potentially hedging my bets as this market goes up, because I am so heavily concentrated in the AI names. I'm bookmarking all these questions, by the way, guys, and by the time that Roy joins, we'll be able to address these questions together. Yeah, no, Roy already mentioned that he was going to be about 15 minutes behind, but 15 minutes I think turned to 30 minutes. So it's fine. I think he's just driving home right now. And yeah, you guys get to see rambling me for 30 minutes, which is like literally my nightmare, which is kind of interesting because like I'm literally a content creator, live streamer, and I'm still so socially awkward when it comes to solo streams. I need to get better at this. I haven't talked to Steve in a while. He called me the other day because he's coming to Toronto for the meetup. So he was asking about hotel recommendations. And yeah, I'm looking forward to seeing him very shortly. Him and Matt. Dr. Crossroads is saying, I'm listening in as I drive. See you in 20 minutes. All right. So we will soon have two of us. Let's see. Yes, I hold Rocket Lab now. I bought Rocket Lab. Okay, I made this post earlier today because this is something that irritates me a little bit. I made this post earlier today, and people were like, okay, that's cool. Like, why'd you make this post? And the reason why I made this post is because when I sold off ServiceNow, and I bought Rocket Lab, and I bought CoreWeave as a result, people were making fun of me because over the next day or the next 2 days, the sell off continued for AI names, and ServiceNow continued to rise up. And people were saying, oh, well, that was a dumb trade or whatever. But if you look over the next week, because Rocket Lab and CoreWeave were so oversold, them just reverting back to a normal range provided some really well timed gains. CoreWeave is up over 25% from where I bought it literally last week. Rocket Lab is up around 12% from where I bought it last week. Whereas ServiceNow is up under 5% from where I sold it last week. And these are not always going to hold. But the reason I wanted to make this post was to showcase that, hey, it's non-deterministic sometimes, that it's very difficult to, judge these trades 24 hours after or 48 hours after. The reason why I rotated, however, to double down and triple down on this high beta name or on this AI trade was because I thought they were oversold, was because I thought once they do revert, that it was going to turn out to be a better position for me to be in. Now, with regards to ServiceNow, am I sad that I'm not in it anymore? Absolutely. So I never held Snowflake, but I cut ServiceNow last week. And I think how I view it is I would definitely get back into it if I wanted to have a hedge. So maybe I might cut my VG and I might buy ServiceNow for the same amount. And that might be my new hedge and I'll own all of them. But yeah, it was basically a trade that I did with a goal in mind, right? Do I hold Palantir? No, I don't. Selfishly, I was kind of hoping that they would dip after this earning so that I could get in, but that company is definitely crushing it from a growth rate perspective. I'm gonna hold off on talking about Palantir until Roy gets here because I don't want to steal his thunder. But 93% growth is just fantastic, and really, really happy for the shareholders out there that are up like 15% after hours. So I'm gonna hold off on that. Let's take a look here. I'm just scrolling down. Yeah, Rambling Tavis is a good hang. Yeah, dude, it's a whole vibe. I wish options trade overnight hours as well to buy Palantir. No, you don't. This is going to be the most stressful development you're going to have for your portfolio if you're an options trader, even if you're an options seller, quite frankly, and you have overnight options. That is going to be not fun at all to have because it's just more time you have to dwell. Highland, thank you for the 5 gifted memberships. Really, really generous as always. I think Highland has become the channel's #1 donator. So yeah, thank you. Congratulations to those who got a free membership. And yeah, you guys can thank Highland. Yeah. So funny enough, I'm not going to answer this, but one interesting piece about Zeta is, would you guys be interested for me to potentially interview Zeta CEO? I could potentially make that trip out and see if I can get that interview. I don't have anything locked in, by the way, but I do have an invite to like their investor day, and I could potentially interview their CEO. The problem is that I'm not like a huge Zeta investor myself, but it would just be expanding out a little bit. And yeah, let me know. Maybe I'll start a poll actually. Interview Zeta CEO. Yes, no. All right, you guys can let me know if you want to see something like that on the channel, or if that's not something you'd be interested in. I would have to make the trip. I would have to make the flight over. So I don't want to do that if it's something that the audience is not interested in. But if you guys are, then I'll absolutely do that. Sauceman says, following your ServiceNow tweet, I sold ServiceNow as well. I feel like ServiceNow keeps getting rejected from going higher. You might be right. I agree on the hedge, especially with all the semi-stocks earnings that are coming up. Yeah, look, I'm not against the company at all. I mean, even Jensen came out and said that ServiceNow is something that the market has wrong. And I think they can go much higher. I think they can do, they can be very successful. It's just a matter of, if ServiceNow was oversold, okay, let me put it very simply. If ServiceNow fell from $100 and it fell to $70, let's call it, because of some news that came out that just crushed the SaaS sector, I would probably be selling a little bit of Nebius and a little bit of CoreWeave to buy ServiceNow. But because it was the other way around and it was CoreWeave and Rocket Lab fell and ServiceNow was higher, I did the opposite of that trade. And so the point that I'm trying to make is I was entirely trying to take advantage of a momentary opportunity, and it didn't really mean anything for my stance on the long-term vision of that company. Now you might say, well, Tevis, that's not investing, that's trading. And you'd be absolutely correct. That is trading. But ServiceNow initially was a swing position for me all along. I entered ServiceNow at $97 with the idea that I would be cutting it at about $130 to $140. As it so happened, an opportunity presented itself and I had to cut it at $111, and that's fine. So be it. I took a smaller set of gains that I locked in on ServiceNow to be able to take advantage of the CoreWeave situation. That doesn't mean that I'm bearish ServiceNow or that I wouldn't get back in. I, in fact, am very interested in getting back in. So that's the rationale for that. Yeah, Highland is fantastic. We love Highland on this channel. Okay, let me know what you guys would want as some members only content. Okay, I am happy to spend the time to make members only content, even though I can only make like 2 videos, 3 videos a week total with my schedule. I'm happy for one of them to be a members only video. I just want to know what you guys want to see. So for the members in the audience, let me know what type of members only content that you'd like to see, and then I can make that. Highland, you have obviously first dibs. Dr. Crossroads says you should interview the CEO about whether or not you should invest in Palantir. Yes, dude. If Alex Karp is doing push-ups on that chair again another quarter in a row, then then I think that could be fun. Question for Trayvon. That's a new one. I like that. Do you roll your under pressure covered calls or simply buy to close and wait for multiple green days to write more calls? Assume for all scenarios where you are okay with letting shares go. So generally what happens if I'm okay to let shares go, here's what goes on in my mind. If I cross my break even, so let me run through both scenarios, okay? This is a good question. Okay, scenario number 1 is I am not okay to let the shares go. In which case, the moment that I break my break-even price, so that is the strike price plus the premiums that I got paid, I would look to roll that out where I get a net credit. If I want to get rid of the shares, if I'm okay letting go of the shares, then what I'm going to do is once it breaches, I do nothing and I wait until the second last day or the last day to expiration once the time value is completely drained from that option. And then I look to see if there are any options for me to roll out for a net credit or a break even. Now, normally this would not work with very low beta names. Like if I did this on Amazon, it would not work. But because I'm doing it on high beta names like Nebius and CoreWeave and others, the time value replaces the actual amount that it's broken through the break even. And generally speaking, I can roll it out maybe another 2 weeks, maybe another month for a net credit. And that way I can raise my strike price and I can give myself more outs if I want to keep going in that position. So let me know if that helps, but that's essentially how I approach when I'm underwater on covered calls, whether to roll out or to just get assigned. If I cannot roll to get a net credit, then I'll just get assigned and I'll write cash secured puts. Nick says Zeta needs to chill as I'm still building my position. Was planning to a major buy late August when I get a large chunk of cash freed up. Yeah, I mean, look, Zeta is definitely executing. I don't think they're going to zero, but we'll see. I mean, maybe the CEO has more to tell me. We'll let you guys decide. Do it for the content from a product perspective. That could be interesting. That could be interesting. Like if I do an interview, but view it as a product membership or a product management perspective, like that could be an interesting angle to do it. Can we get Elon instead, bro? If I could get Elon on the stream, I would have gotten Elon on the stream right now. But yeah, what's kept me away from buying Zeta shares? It's just the fact that I can't be in everything all at once, and the growth rate that I saw from when I looked at it was not that crazy, and the business was a little bit complicated for me to understand, like, how their stack competes, what the competitive advantage is, how Athena plays into the whole context of things. And so the level of difficulty plus the modest, let's call it, return relative to all the AI names that I was investing in as my opportunity cost just made me not be super interested in it when I first looked at it. But it's something that keeps coming up and it's a retail favorite. So I'm definitely not against looking at it consistently. I think if I were to interview the CEO, I'd be more and more interested about potentially investing in the stock because I would get some firsthand, you know, insights on the growth potential or the guidance, let's call it. Jeremy says Tattooed Chef is coming back with a vengeance. Are you in? No, dude, I'm not in Tattooed Chef. I'm not going to be in Tattooed Chef. And yeah, I mean, I hope it works out for Jeremy. Let's see. I'm just gonna scroll down, and I'm like really behind in the chat, so I'm gonna scroll down, and I'm just gonna bookmark actual real questions, and then I'll see what options premium strategies is what Highland wants to see. Yeah, okay, maybe I'll make a video on option. Actually, let me make a reminder for that. All right, so let's say members only options premium strategies. Okay. All right. I'll make it. Members want to see you eat tacos. Yeah, well, SoFi's not at $20, so there you go. How to pick options. Okay, let me add that to the note here. So how to pick options. Okay. Matt didn't get the invite. Hey, man, I don't even think Matt can be mad because I'm a fellow Rocket Lab shareholder, so better put some respect on the name. Video challenge. As a fellow Canadian, I would like some Canadian content. BlackBerry, Lululemon, Enbridge, TELUS, just to mix it up. Yeah, dude, like, look, I would be making content about pretty much every investment under the sun if this was my full-time job. The problem is I have to really be ruthless about my time that goes into making every video because I have a very limited amount of hours where I can do these live streams. And so if I make 3 videos one week, it means that I'm not doing one live stream that week, generally speaking, right? Because that's the amount of time I have allotted. If I make a video about TELUS, it means that we're not going to get a video about SoFi or about BMNR or about Nebius or something else. And just the views will not be there. It's not that I have an allergic reaction to talking about Canadian stocks. There's some that are killing it. It's just that I have limited cycles, but I will definitely, let me add it as a note. So actually, let me open a notes document here. And let's call it video ideas. So how to pick options trades, options strategies, and then Canadian stocks to choose. You know what? I might actually do some shorts around this, like top 5 Canadian companies that I would do. Yeah, maybe some shorts content. Top 5 Canadian companies. And by the way, for those of you who don't know, I am now making shorts and I'm not dancing on TikTok. I'm mostly just clipping stuff from the live streams, but I'm also making, like, whenever there's news or something like that, I'll make a short about it because it's much faster for me to do that than to make a full length YouTube video. So definitely follow me on all the other platforms as well. Amazon is absolutely low beta, dude. I don't know what world you live in where Amazon is high beta compared to the other stuff I have in my portfolio, but yeah, Amazon is like the most boring, slowest, mover out there for me. Options are amazing, and I have this to thank. Thank you so much, man. Up $5,000 USD in my first 3 weeks of trading them. Yeah, I mean, be careful, pace yourself, but they're definitely very powerful when done right. Where is Roy? Roy is on his way. Roy is going to be here in a few minutes, Tanner. So June says, if you appreciate Tevis going on solo, don't forget to like the stream. Thank you, June. Really appreciate that. Please do YouTube shorts every week, one stock of NASDAQ 100. I like this idea. I'm going to mark it down, okay? YouTube shorts, one new stock per week. Like one of those where it's like, I have 1 minute to research. Yeah, 1 minute to research / talk about. Okay, I'll do this. I'm not only doing them on YouTube, by the way, guys. I do have TikTok. I'm still doing that account. I'm doing Instagram, which is at Fun of Investing Clips. I'll put it in the chat. IG at Fun of Investing Clips. So yeah, you guys can just go follow me there, and that's where I'm going to post some actual unique shorts content because that's just fun to do. Only good Canadian company is Shopify. I do like Shopify. Time to go full-time YouTube. No, man, I am in a executive role in my company, so I get paid a lot of money, and it's fun stuff that I enjoy doing. So I don't know. YouTube is really fun, but like once it becomes viable, I'll definitely do it full-time. Until that point, I think I'm stuck in an actual career for the time being. All right, and we have my savior, Mr. Dr. Roy. Welcome, sir.
Yeah. Sorry, Tevis. Sorry, audience. Sometimes meetings run long and late, but I'm glad to be here. And boy, what a day on the market.
Yes. What a day in the market indeed.
Yeah, a meeting, an important meeting, but yeah, no celebrations yet. But man, what a day, Tevis. What a day. It was, I believe, when we finish up now. Before even incorporating Palantir's move, which it's a fourth, I believe, largest position of my portfolio. It was the 5th best day I've ever had on the market, like ever, on a single day return for the overall portfolio. So that felt pretty good. By pure numbers, it might be the best day, just because when we're talking about 2021, which is 2 of the days, that was a while ago with a much smaller portfolio. So
yeah,
how do you fare today?
I think my best, so it's like you're going to get more and more best days as the portfolio gets bigger on an absolute dollar basis. I think on an absolute dollar basis, my worst day was probably Wednesday of last week. That was like a annual salary loss day. And my best day ever was Thursday of last week. Then, day right after, that was like an annual salary gain day. And then this might be like definitely top 3 of my best days in the market, not percentage wise, but dollar value wise for sure. So
yeah,
very happy, man.
I was referring to percentage wise. It was, I was up, I think 12 point something percent overall in all my portfolios, which is just like, two of them were AMC squeeze days back in 2021. And other than that, there was a couple of really nice Palantir days back when it was initially ripping. But yeah, what a day.
Yeah. Being down 6 figures in a single day is a blessing. This is a matter of perspective. And I mean, I think there's people who would just throw up if they were down 6 figures in a single day. And there's people who are like, oh, that's a pretty mild. If I was Matt Money, this would be a mild day, But
so I heard you talking about ServiceNow and pining for it and thinking of you're not leaving CoreWeave, right? You're just like, maybe I'll take a little bit off and put it back in there.
No. I'm not leave. Well, I mean, look, I'll leave CoreWeave if my covered calls get hit. I'll be very transparent. I wrote, let me check. I wrote them today, and let me check the strike price for you guys. I wrote CoreWeave $100 covered calls. Did I write 100 or on 115? $100 covered calls, let's call it, because I can't check my brokerage right now. For August 28th. So I guess I'm out of CoreWeave if that doesn't sound right. But let me just double check. But yeah, if it crosses that point within the next couple of days or next couple of weeks, I'm out. And the reason why, Roy, is because I have a lot of options on it too. Like I have the 120 leaps for next year, or for 2028, I should say. And then I have the $90 puts for October, and I have the $70 puts for October. So
Oh yeah.
yeah, if it hits that number, yeah, that sounds about right.
The real reason is because I sold out of Nebius when it pumped hard, and you're just like, yeah, this is payback. Not really.
Yeah, well,
um, so like the whole, SoFi was up almost double digits. Of course, Palantir roared after, as we're going to talk about Palantir in just a second. CoreWeave up massively. Nebius and Iron, like so many names up by substantial figures. What was the catalyst? Was it just Monday in a bull market?
Citadel buying some more stuff. I don't know who even knows the catalyst anymore, man. It's just there is no catalyst anymore. Is it like I guess Iran is almost at an end, but there was no agreement. Like I don't even know. I don't know.
I don't. I mean, if the market's buying that, I don't know what to.
Well, here's the interesting piece, Roy, because generally speaking, when we see one sector rallying, we see another one tanking, but everything was up. Like VG was the only thing that was down in my portfolio.
Yeah.
SaaS was up, AI was up, semis were up, everything, and that's rare to see. So like that to me means that there's something going on behind the scenes that yeah, and maybe it is as simple as Kieran here says, no Fed for 2 months. We're halfway through earnings seasons. By the way, earnings, the majority of them, like 3/4 plus of them, beat expectations. Okay. So I think there is something to be said about the resilience of this rally going. I think also people wanted to take advantage of the drawdowns that they had last week. And they said, hey, look, we've bounced off of a low and we're going to be rallying back up. And it becomes a domino effect from there. That would be my best attempt to steel man what happened today.
Yeah. It's strange, but I'll take it. I mean, like the market, like you were talking about before with CoreWeave trading briefly under $60 a share. It's like that's just irrational. And when you get, within, let's see, Wednesday, Thursday, Friday, and Monday, so 4 trading days. Well, not even 4 trading days because after hours Wednesday, 3 trading days, you suddenly have this kind of a reversal. Like the market is not efficient. It's not fully rational. It can grab onto, and like really, it's a narrative that moves things. And there are a few things that change. The Feds had their minutes, and the Microsoft event, we talked about that possibly saving the market with Amy Hood there. But yeah, like I think that people that are pointing to a specific reason, like there are factors. Oil is down. That's a good thing. If Iran is really resolved, I mean, that's nice. We'll see if the market actually buys. I don't think the market cares. But I think you're just trying to find like a reason to make it rational. But the better way, rather than this, like I was driving around, like Houston is a big city, and my daughter and I were driving around. I think it was on Friday or maybe it was Thursday, and there was just some random weird person that just was walking the sidewalk. We were stopped at a stoplight, and he just was by himself, and he just started like dancing some like crazy weird dance alone, like in the middle. There's no people, like it's Houston. So and then he walked like another 20 feet and they did the same thing. And I'm like, we could try to ascribe some rational reason for it, or just be like, hey, the dude's irrational. There's something weird about him. But I mean, good dance moves. And so today I think it's just a nice dance moves. I like this market.
Yeah, he was probably like a Nebius investor or all in Palantir or something,
Like I said, we can try to ascribe reasons, but yeah, no, regardless. And yeah, Charles, no, I'm not going to be at Toronto. I'd love to be. It doesn't work out with my schedule, but yeah, hopefully I'll be able to do more of those type of things in the future here.
It was.
Are you ready?
TikTok dance. All right.
Honestly, like
right.
Yeah, I could only type when I was at a stoplight, and so when you were asking about suggestions for members' videos, I mean, right there, Tevis dance.
I'm not. There's no amount of money that will make me dance on camera for fucking Gen Zs, dude. There's no amount of money in the world. Tevis looks chipper today. Jared Wang says. I wonder why. Yeah, it's because we making money, baby. We're back.
A lot, yeah. Yeah, one thing that helps me too in this, when you're dealing with, as your portfolio grows, like Tevis was saying, you need to figure out a way to handle the psychology of the market, both on the upside and the downside. The upside, the risk is you have days after days of this, and then you want to take on more and more margin, risk more and more money that is not responsible for you to risk. And then on the downside, you get caught. And downside is, that you, like we saw on, it was Wednesday, was the largest day for tech sellers on the retail market, I think ever, or at least in the last 5 years. It was selling into just the market being silly. And so one of those tricks that at least worked for me was look at the percent rather than the actual amount of money. So I'm like, today I'm up 12 or 13%. Like two of my portfolios are up 13 something percent. I think it's before the Palantir move. And it's a nice percent. It's awesome. Versus like, when if you're a Matt Mini type of guy and you're down $1 million in a day because you're rich, that's not comfortable to think about. But instead it's like, oh, I'm down like 10%. It's 10%, like you just don't think of the money in your bank account, I think, in the same way as the way that you think about your investments.
Yeah. Parsa says, I want you to put the word out there. We back up. The Wire. Have you seen The Wire, Roy? Great show.
No. I've heard of it though. So
that's what that's from. Yeah, it's a great watch, man. Highly recommend. Citadel really wanted to show Leopold who's boss. Yeah, man. Leopold died for our sins. Everybody remember that. Don't forget the name. Like, this guy is he was a martyr. He was a sacrificial lamb to the stock market gods that we all needed to rally higher, because this poor guy got liquidated on Wednesday, sold his entire book, and I think his entire book is up like 50% at this point in the following days, which because he was levered is even higher. So everybody thank Leopold before you go to bed tonight. That's all
I heard it was most, not his entire book, but I mean, like it's got to be a lot of it if it's not all of it. Same thing. So Tevis
has a few billion left in his private fund. Poor guy.
Are you ready to talk Palantir?
Are you ready to talk? I'm not going to do much talking, man. You're going to do. You have Slack to pick up. I've been talking for 30 minutes.
I feel like I should take this paddle and just like hit you upside the head and ask what is wrong with you. It's Palantir, man. It was trading at like 106 or whatever, and you didn't. But I mean, like at some point, Palantir will give you that entry. Like you said, I do appreciate that you were watching it and looking for a follow, because we have seen. I actually predicted that it was fall despite really good earnings. It actually beat my expectations as well. But the market has, prior to today, largely sold off really good earnings. I'm like, well, they're going to have really good earnings, so why won't they sell them off? The reason why people oftentimes post and say that Palantir it is just too expensive, but like we need to actually not just look at the multiples only, but look at the actual ridiculous business. So let's do that real quick. I will probably after this go ahead and do a kind of review of their whole earnings, but let me just pull up some slides, and we're just only going to look at a light touch of these. So it's probably really hard to see. This is the rule of 40 for the top 100 market cap companies. And you can see a massive cluster here. I know you guys can't see this up here. These names right here are all memory names. You include even CXMT, which now is up there, SK Hynix, Micron, and Samsung. You have Palantir at 155%, which is insane. And then NVIDIA right there at 153%. Not bad for NVIDIA. And then everything else is here. And like the really shocking thing about this is, usually 40, it's called the rule of 40 for a reason. Like if you're above 40, like you're just fine. This is just insane. And when you talk about like cyclical companies, which memory still is, I think that this kind of breaks a little ways from the cyclicality. NVIDIA is as well, though. Again, I think it's going to be a while till we see that cyclicality resume, just because of the thrust of the AI race. Palantir is anything but cyclical. And so we can see here, before we go into more slides, let me just show you guys real quick the revenue growth, and this is just obscene. So I predicted 84% year-over-year revenue growth, and there's a couple of measures that they kind of made me kind of second guess at and think perhaps this is wrong. So yeah, here we're at 92%. This is just, I mean, like if you're talking about a little tiny startup company, sure, or CoreWeave and Nebius, which are just bringing revenue online. They're doing it rapidly. Awesome. But that's really not sustainable. This Alex Karp is talking about doing something similar like this all through next year. For U.S. commercial, he's looking at 150% revenue growth. It's their fastest growing line. International is the slowest. But what's crazy about this, Tevis? Let me pull up the cash flow statement too. Did you see their free cash flow?
I didn't see anything, bro. I didn't see anything.
Okay, cool.
I think their international growth was like 150 something percent. I saw the top line number was 93%.
Yeah.
And that's all. That's literally all I saw, just those two numbers.
Okay, well, here's the free cash flow. It's 1.2 billion. And the neat thing about that number is if you go back, so June 2026, you go back to June 2025, a year ago, it wasn't that they did 1 billion in free cash flow. That'd be a nice increase, 20%, not bad. This was their revenue last year, Tevis, a year ago. 1 billion. Now the free cash flow is 200 million higher than their revenue was 1 year ago. Who does that at this scale? Like it's insane. It absolutely is insane. And usually when you have this kind of growth right here, we'll look at guidance. We'll look at a couple other numbers too. I know I'm kind of all over the place. You have to sacrifice your margins for that. That's the thing, is they're not doing that. So we're going to look at operating margin, which of course gets better as you become more and more profitable, but gross profit margin here as well. Now, gross profit margin did take a tick down, and I figured that it would. I actually predicted 85%. I was just about on the money there, just because 86.8% is just almost impossible. We can zoom out, and you can see this historical trend here. Let's do it this way, and you can see their overall gross margins, or this is operating margin, sorry, have continued to improve because again they're profitable now. And even their gross margins, yes, this was a tick down, but 85% is insane, 84.7. It continues to get higher and higher. So they're not doing the trade-off of like, hey, let's increase our revenue by sacrificing our margins. It's wild what they're able to do. And then the other thing we'll look at the slide deck again here. So ServiceNow is one of those, Snowflake and CRM and so forth. They're all in the SaaS space. And with ServiceNow and also CRM, you have the phenomenon whether you have a lot of mergers and acquisitions. Palantir doesn't. This is all organic growth. That makes it even more impressive because do you remember Google Cloud, GCP, how fast it's growing? They reported a week and a half ago.
Yeah.
80 something percent, but a lot of that is because of the Wiz acquisition, that it's inorganic growth. Nothing wrong with that. It's still growth regardless. I'm not taking it away from Google. 93% organically. It's crazy. I don't know. I was expecting 84. It's a 20% quarter over quarter growth. So, okay. A couple other things. We'll skip all this stuff.
One thing that I found interesting, Roy, was you can confirm or deny this, but they mentioned they have a stake in SpaceX and it accounted for 3 cents of EPS growth.
Yeah.
Was that surprising to you? Did you know that?
No, I did not know that. Yeah, I missed it when David Glazer, the CFO, was reading the numbers off. And I was watching Amit's live stream and getting ready for the meeting that happened a little bit later. But yeah, one of the guys mentioned that. I was like, let me go back.
Yeah.
Nobody knew that. It's
like, how is it possible that we don't know something so material where it actually changes your EPS?
Yeah, I'm guessing there's a good chance that SpaceX ended up contracting Palantir. Elon is, of course, very familiar with Alex Karp and Peter Thiel. I'm guessing that's probably it. I mean, the other thing is we can go back to the balance sheet. I don't know that we need to, but they have over $8 billion in cash and no debt at all. They don't need to do acquisitions. They're growing like insane. Any acquisition that they get is probably growing slower than them, which is just crazy. And they're already the leaders in the space. So an acquisition like for this company, I don't think it makes a lot of sense. Like there's probably something out there that does. I just don't know of it. So
yeah,
they're I think hindered. I'm not as confident as I was like a week ago on doing buybacks just because of an executive order in January that Trump signed preventing defense contractors. I don't know if Palantir falls under that umbrella, but I do know when they reported quarter 4 earnings that they voluntarily exited their buyback program. So what are they going to do with that money? It could be that they just were like, hey, let's go invest in SpaceX a little bit. But I think more likely scenario is SpaceX was like, hey, we like what Palantir has. Let's do a deal, and maybe let's even give them some equity in return instead of just revenue. But yeah, 3 cents EPS boost, which is nice. Yeah, here's their top fastest growing line, 149% year over year U.S. commercial revenue growth. CARP is targeting that over the next entire year as well, not for the whole business, but for U.S. commercial specifically. It will, under that scenario, become maybe in 2 quarters the highest leg of their business. The government right now is, we can look at that in just a moment, but you can see here just great growth. GAAP net income, of course, over $1 billion. It wasn't that long ago, Tevis, 2 years ago, where bears used to look at this company and say, hey, most of their revenue actually comes from interest revenue off of their cash that they hold. And it was true. That's not the case anymore. If anyone brings it up, they are probably a time traveler. That's, I think, the most explainable thing. So GAAP operating margin, rule of 40, U.S. revenue growth. So this is U.S. revenue. This is government and commercial. Just obscene. So you can tell, since they're growing at 93% overall, that means international is lagging. It's not bad necessarily. Like U.S. revenue growth, government on the government side up 90%. Overall commercial 110%. They don't break out the international here, but you can extrapolate that from the numbers, and it's not hard to do. And they do have it on the 10Q when that comes out. So yeah, really strong performance. There were a couple of spots that were a little bit weaker. This was one of them. If you look at U.S. commercial customer count and overall customer count as well, it's not quite as high of growth as we've seen in the past. These are just raw numbers of customers. Whether they're massive customers or tiny, it doesn't matter. Although it is, we should note, it's up off of a much higher base than it was in the past. They don't have a ton of customers, but they are large enterprise customers. CARP has talked about it in the past that they don't, they're not able to meet all the demand right now. And so it's one of those things. He didn't say it quite as firmly as he did in previous quarters. So I'm guessing that they've maybe figured out a way to capture more of that demand. At 93% revenue, I'm not complaining. If you look at the customer count, and they do break out U.S. commercial as well, the one weak spot is, again, international. They grew by 10 total clients internationally over the last year. 10. That's not great. Revenue is up a lot, largely because of South Korea, Japan, and also the UK. But this right here, Tevis, was pretty amazing. We can look at previous slides as well, but number of deals, I mean, of at least $1 million, it's 220 million, except 98 were 5 million. And this right here, this is crazy. 73 deals were at least 10 million, reached in just 1 quarter, not year to date.
Wow, that's great.
Yeah, I need to go through previous slides and see, but this number was much smaller. It used to be like just teens, not even that long ago.
Let me ask you this, because this was one of the critiques that I saw. Any guesses as to why international customer growth is so slow? Any thoughts there, Roy?
I think there's several things to it, but one of the factors is certainly Europe. Europe, you have angst against Trump and against the United States and against big tech. And beyond that, Europe, for the most part, is like, hey, if it's technology, we don't want any of that stuff. The data center thing is kind of the opposite, but they're spending 10 billion euros, which is like a drop in the bucket. We've talked about that. Palantir, very specifically too. Peter Thiel was that first time that Trump was running a backer of Trump, very audibly. CARP fits more into European intelligentsia. He got his PhD in Germany. He describes himself as a socialist. He's not really a socialist, but he is definitely skews more liberal. But yeah, regardless, they look at Palantir, and there's a misunderstanding also because of the public of what they do. And so it's the same kind of criticism as you see here in the United States, which I actually initially thought before I took the time to understand this company in late 2020 and early 2021 as well, that this is like, oh man, it's infringing on civil liberty. Like basically it's what people think of Palantir is what Flock actually is. And it's not anything similar at all. In fact, they were created to protect civil liberties. But Europe is very cautious and gun shy. It's American tech. And so, yeah, despite it being very effective, outside of intelligence agencies, there's not been a lot of adoption in continental Europe. UK, there's been more, but even there's some pushback on the NHS still. Very effective. It's saved lives. It's saved money. Politicians don't care about saving lives, and they don't care about saving money. And so they may end up exiting that contract with Palantir, which would be Palantir is growing fast enough that loss of the entire contract of the NHS for the entire length of the contract would be absorbed in 1 quarter. So it's still a big deal. It's not a great thing, but they could exit early from that contract. In France, I forget what intelligence agency it is, but France is looking at exiting Palantir from a contract that they have for some sort of domestic surveillance, counterterrorism thing, and using something called chaps vision, which no one knows if it's any good, but again, politicians don't care about that. So there is a big pushback there against U.S. tech and U.S. tech companies, and that's probably 90% of it. There's other factors too, but I don't think we need to get into the weeds unless you're really curious.
No, I'm good. Is there any timeline around that NHS contract as to when it renews? Like, when are we expected to lose that?
So next year, I believe in the first quarter is when they can do the early exit, but it's not an easy thing to do necessarily.
Right.
And honestly, like it's like the saddest thing about it is like even if I wasn't a Palantir investor, I'm like, dude, it's literally saved lives and money, but even more importantly, lives. And whatever they choose there, maybe it'll be decent. It's not going to be Palantir. And there's going to be people that die because they go with something that's inferior. It's terrible. But that's the way that politics works. And politicians largely don't care about lives. They don't care about money. They just care about getting elected, maintaining their power. So this right here.
Palantir could always give it to them for free.
Well, honestly, like that's what they did initially in the UK. They ended up during COVID helping with the COVID vaccination, like figuring out a plan to disseminate that for £1.
Yeah.
Not per day, not per operation, but the entire contract. And that's one of those things that did lead to, of course, more contracts down the road. And people were, I don't know, they're weird with Palantir. People are. This is what they have on their books in terms of cash and cash equivalents, U.S. Treasuries as well. Curious about the SpaceX level of the stock too, but yeah, no debt at all. So that's one of the questions. This is a good problem to have of what do they do because they're about to hit over $10 billion this next quarter. The guidance was raised again. I would need to go back and look, but I believe that this implies something around 80% revenue growth for the rest of the year, 81%.
Yeah.
That's pretty good. and they sandbag their guidance too. Not quite as bad as SoFi does, but man. And then lastly, just a couple of quick things. So RPOs is one of the things that's really important. We can see these short-term RPOs really spiked up. Long-term has continued to accumulate as well. Billings, the billings is why I was starting to think maybe I was wrong on my assessment of Palantir to the downside just because of that huge spike up. And then net dollar retention. Let me show you this because I think it's better if we break out and compare it to what it has been in the past. So if you guys aren't SaaS investors, this is sometimes called net revenue retention, and Palantir calls it net dollar retention. This is a measure. It's a little different from company to company. Palantir has a more restricted definition, and so they're more conservative with this. Their definition is if you've been a Palantir client for at least 12 months, not less, and then you up your initial contract, that's the amount that the net dollar retention grows. So what happens very frequently, and really has over the last few years, Tuv, is somebody will onboard with Palantir through one of these boot camps. They'll be like, man, this looks really good for one specific use case. And all of a sudden, within the first 3 to 6 months, they're like, oh my goodness, this is like company trajectory altering. We need to get this in other parts of our business. So then they ink more contracts, but it's before the 12 months. So that's not factored in until after a year with the net dollar retention. I knew it would be really good. I actually predicted 158%. So they came 1% under my expectations. So I'm very disappointed. Not really. The gold standard is actually right here, 120%. If you're a SaaS company that has 120% net revenue or net dollar retention, it's considered absolutely amazing. Like a 1 quarter thing, they're like, yeah, that's fine. But quarter after quarter, this is the Snowflakes, this is the CrowdStrikes of the world. Palantir, 157. And it just gets stronger every single time. Any guesses as to why it just moves up in a straight line?
Because they're a great company. The clients want to do more money with them.
I mean, yes, but yeah, a couple of things. One is this is technology that actually works. Like companies get it in, and oftentimes with software, especially, and also with some AI, you have a strategy. You think it's going to work, and it doesn't quite work as well as you expect, or you have to tweak and change some things. And you're not entirely pleased. Maybe you're not displeased either. Palantir, now it's not every time, but most of the time like they're enamored with what happens. It's why they have all these people come out for their AIP cons. They're not paid. They're not given a discount. They're just like, hey, if you would like, I don't even think that they're given airfare or hotel lodgings. Like they just like Amit. I know he's not a client, but they don't give him anything. Like he has to fly on his own, pay for his own hotel. I think maybe they give him lunch while he's there. That's it. No pay or anything. And clients show up in droves because Palantir is a cult. And when you become a client, you join the cult, you drink the Kool-Aid, you're like, man, that is good. Can I have some more? And that's exactly what's happening here. The other thing that's happening too is with AI being implemented, with all these LLMs just being diffused, with so many more companies thinking about their AI strategy and how to manage their data, and really are starting to think outside of the box of typical enterprise software. All of those things also flow into Palantir, and this net dollar retention, where people realize, especially from like these AIP concepts, like, oh man, we could use Palantir for that. We could use it for this. We could do it for this. This is a tool where people love, for the most part, interacting with it, and has phenomenal results. So yeah, they're just positioned so well. You can look at almost any number outside of probably international, and even there, it's not terrible. It's growth at like the high 20s. But I mean, when you're comparing the rest of the business, it's relatively small. So yeah.
Let me ask you this. Are you buying more? You were buying it at 280 or at 180, 200. It's at a discount now. Are you buying more?
I mean, I don't think I was buying it there. I was buying it in the 150s at the world's slowest DCA. And how slow it was when it fell to 120, I bought more than my entire DCA over 9 months. And it wasn't a huge amount. If we had fallen under $100, I would have probably instantly made it my number 2 position, just like without thought. Where it was, if CoreWeave and other names as well had not fallen as substantially, I would have been loading up on Palantir. But no, I added, I think I added between my DCA and my buy 15% or 20% to my position overall. So I would like it to be more. I don't think it's egregiously expensive here. I think it's fair value range in the 130s, 140s. And yeah, if you look at it purely by price to earnings and you ignore growth and you ignore margins and you ignore everything, it looks expensive. And there's some measures where it is, but yeah, it's a high quality name. Like, I don't even think I have to say that anymore. So where are you going to be a buyer?
$100.
All right. Yeah, you're going to do prices right. So I'm like under 100, I'm going to buy a ton. You're like exactly 100.
I'll start buying. I mean, look, man, like, Rock Lab was at 150 and it fell all the way to $61 before I bought it. I mean, it fell to in the 50s, but I picked it up. This is what I was saying last week. Like, you don't have a gun to your head to jump into everything on somebody else's time. You can afford to wait on your own time, and the market will give you opportunities. Maybe 3 months from now is Palantir. Maybe 3 months from now, Palantir's at 200, and the market gives me another opportunity, right? And I'll buy that instead. So I think you have the luxury.
Can you throw up Matthew's comment at 10:04?
If CoreWeave was under $60 and Palantir was under $100, which one are you buying?
Tevis, you want to answer first, and then I'll answer. I'll tell you how wrong you are.
I mean, I'm buying CoreWeave, but it depends how far under 60 and how far under 100, I guess.
$1 under.
Okay, well, yeah, I'm buying CoreWeave.
Yeah, the reality is both are screaming buys. And CoreWeave would probably outperform in the short term, but I'm not confident in that. Like, I think it's going to do great. Palantir and 100, like, this is a company where I don't plan to ever sell another share. I might have to at some point, and I'm sure like in retirement I'll think differently, and maybe like it goes tomorrow to $1,000. I'll be like, well, yeah, I'm selling all of it because it's great company, but it's way too much.
Yeah,
But yeah, Palantir all day.
I think it depends on like what your goals are, right? Because like lately, everything that I've been buying, Wkly, CoreWeave, ServiceNow, these are all swing trades, right? But if I'm buying something for like long term, buy and hold, and I don't think about it, then yeah, maybe Palantir, right? But I think it really depends. I think right now I'm in that mindset of I'm just doing swing trades on a portion of the portfolio, call it 5% of the portfolio, because I've built up my position that I want in Amazon and in Meta and in Nebius and in SoFi. And it's just like, all right, I'll ride these. And I still want to scratch that itch of taking advantage of short-term opportunities. So I've been doing that over the past several months. So I think that's like a big distinction.
Yeah, and throw up Raven Terp's comment there at 10:06. He said CoreWeave could 3x in 1 year. Yes. Palantir probably not. Also yes. I mean, like it might double if everything lines up really well for Palantir and be very expensive there. CoreWeave at 3x, yeah, it could definitely happen. And but for me anyway, like I already have all of my swing portfolio position in CoreWeave, so that's the other factor is I'm already swinging it and swinging for the fences on that, and the rest is all long term. And like, which is the better long term hold? There's CoreWeave is great, but there's also Nebius, and there's Iron, and there's Oracle, and hey, Meta's creating a cloud business, and you could do Applied Digital, and you could do TerraWolf. I think the big three are especially attractive for neoclouds, but there's only one Palantir, and people try to get the Temu version of Palantir, whatever that is. Dude, you're not going to build it. It's the hyperscalers, large companies, and others have tried.
Yeah,
they are unique. I think it takes a unique set of circumstances, unique timing, unique leadership. And yes, people copy and imitate different parts of the business because they've been so successful. Like forward deployed engineers were not really a thing. And then Palantir, and they're like, hey, everybody does these now.
Yeah.
Boot camps, I mean, they were kind of out there, but popularized by Palantir. And now everybody's into that. Ontology, even companies are stealing that word. It's not the same. It's a Temu version. There's only one Palantir. So long term, easy.
Yeah, that's very possible. I also agree with this comment, Roy. Kieran says Palantir is still in a downtrend, even with this earnings. And if we look here, all of 2026, they've been on a downtrend. I mean, they started off the year or let's say in end of October, they hit a cap of $207. And since then, they've been slowly trending downwards. And so I think $100 a share might sound ludicrous. It might sound like something I'm just saying to make a salacious, clip for me to make into a short. It's not. It's the fact that, again, I want to be able to buy Palantir on my own time, on my own terms. And if it's still in a downtrend and it continues to slowly sell off on all of these rips, then I might get that opportunity. If I don't, then I don't. But I might, because I don't see, I guess from a technical perspective, even for it to go, like I could see it going back to 100 before I could see it going back to 200.
Yeah,
Which comes first?
I don't think you'll see 100 ever. I mean, we came fairly close.
Ever.
Yeah. I mean, barring like reverse splits or something. There would have to be, so my perspective since 2023 has been we are in a persistent bull market all the way through either 2029 or 2030. It could get pushed back a little bit. It could happen a little bit closer. And we actually came close to the bull market getting ripped to shreds because of Liberation Day and all that stuff last year, thanks to the very volatile Donald Trump market that we're in. But yeah, I still think that's the case. There are things and worries out there always in a bull market that can deviate from that, but I really do think we have until 2029. So with that said, since we're probably not going to have a bear market for a while, even if it's 2028, next year, 2027, I doubt it. But let's say it happens, Palantir has more time to grow in their valuation. It makes it harder for it to push under $100 a share. The use case is established more. People finally wake up and realize, okay, Anthropic and OpenAI are not going to eat Palantir's lunch. It's always the dumbest argument. Michael Burry's arguments on Palantir are basically like, hey, Alex Karp has a private jet and he charges Palantir for fuel. So yeah, it's a terrible company. I mean, like there's more to it than that, but it just he's so short sighted. So
Yeah,
it would be tough to see it under $100 a share, given with what they're doing. Also, because you have a lot of people like yourself that said, "Hey, you're not even that crazy about Palantir. You're just like, gets $100. I'm going to buy some." There's
yeah,
a
absolutely.
ton.
Like, I want to just clear up three things. First of all, I think the Burry thesis is kind of silly. I don't agree with that thesis to short this. Second of all, I think the company is obviously executing at a high level and they're doing a lot of things well. I mean, having close to 100% growth is not just luck. So I'm not saying that they deserve to be at $100 at all. I'm saying that the market can be irrational. And right now, many names are trading in a narrative or in a story. And I just don't know. I can't predict where the market's going to go. And when I say 100, I mean, 105, 106, where it hit a couple of, months ago. I mean, 110, like around that range, continuing the downtrend. I don't mean like literally 100 on the dot, but I still think, like, I don't know, maybe this earnings is a thing that turns the trend around, but it would be yet to be seen from a technical perspective because it is still on a downtrend, technically speaking.
And like one of your audience members said, so is CoreWeave, sadly.
Absolutely. So is CoreWeave. No, 1000% so is CoreWeave.
Yeah, and I see some people saying, "Hey, the market can always surprise you." Yes, I see two people say ServiceNow was the same thing, that nobody in their right mind would say ServiceNow at $100. It got there. I would also say Palantir is not ServiceNow. Like there are other companies that do a lot of what ServiceNow does. Palantir really doesn't have competition. It doesn't.
Yeah, it might hit 100 in the event that people overly freak out when year-over-year increases decelerate because of the comparable periods. That's possible. I don't know. We'll see. We'll see. That's all I'm saying. We'll see.
Yeah,
I feel like
I don't know.
I feel like I've been beaten up enough by this market, Roy, to never make predictions like we'll never see X price again. Can we see $4 on SoFi again? I mean, like, sure, you can. Like, who knows what happens in this casino of a market, man? Like, Citadel controls everything. We're just little pawns, and just be happy with your gains today.
Yeah, no, and if the market did give me Palantir under $100, like, dude, that's awesome because I'm gonna load up. And the lower it goes, like, if the market did like the irrational CoreWeave thing and it sells off Palantir to $60 a share, I would probably just own Palantir. I mean, of course, it depends on what's driving that. If Alex Karp goes crazy and starts drinking Celsius and saying that they're pivoting their entire company into an energy drink business, obviously, I'm not touching that. But
Yeah.
I mean, barring those sort of things. I think it's very, very unlikely though, and it's insane. Yeah. I mean, like here's ServiceNow. ServiceNow had a great report. The earnings call was amazing. I think that they have a nice moat.
Can I quickly answer this before ServiceNow?
Yeah.
Because the donation. Highland, thank you for the $5. SpaceX, $75 puts. Bloom Energy, 160 puts. Nebius, $250 calls. SoFi, $25 calls. BMNR, $25 calls. All sells for premium. Thought? Lightning round. Got to put the kids to bed. Yeah, I don't know the time frame, but I think these are all fairly safe except for the Nebius. I think you're screwed on the Nebius. Especially going into earnings. I think that can get blown out of the water completely. SoFi, $25 calls. Like, I think that's the safest one of this entire list, followed by BMNR. SpaceX, $75 puts. I mean, look, if you're thinking about, I don't think that's going to get hit, but like, I think if you're thinking about like 2 months out, that would be riskier than SoFi, $25 2 months out, for me at least. Bloom Energy, 160 puts. I don't follow Bloom that closely. 218 right now, but look, when it drew down past 160. So, I think if Bloom Energy continues that downtrend, then I think you can definitely hit 160 on Bloom. But that's how I'd stack rank it from safe to least safe. I would say safest is SoFi, BMNR, and then SpaceX, Bloom, and then riskiest is Nebius 250 calls.
Yeah, I would probably do SpaceX puts, like if I was picking from between those just for my portfolio. I think it's a pretty attractive price. The premiums are probably pretty good, and I think it's pretty unlikely that it gets hit too. But I also wouldn't mind owning it there.
SpaceX reports earnings next week, right? Or
next week? Yeah, I can't remember the day, but yeah. That's going to be a fun one.
I think it's this week, actually. Or no. I don't know. People in the chat will let us know. But yeah, SpaceX on earnings, man, like $75. That's my only fear.
Oh, it's tomorrow? Is that right? How did I miss that? I guess I was so focused on Palantir. Like, I guess you guys confirm if it's tomorrow. It looks like it is, though. So, yeah, cool.
Yeah, that's going to be fun.
All right.
Okay, so
Thank
one
you,
thing in mind for SpaceX, Highland, just to finish that thought, is the lockup period. Okay, this is the main thing I want you to keep in mind for SpaceX is after they report earnings, I don't know what the lockup periods look like, because if you get a huge volume of insiders selling SpaceX, or even funds trying to front run this through short selling, yes, dude, you could definitely blow under 100 for SpaceX. Now, the flip side of this is the fact that we're pricing in, or starting to at least price in from a poly market perspective, the potential merger of Tesla and SpaceX, which could absolutely drive it higher. So you can get people speculating and buying SpaceX stock on the thought that it's going to go higher. But that's sort of like the battleground is when I see it. Earnings plus insider selling. And then on the other hand, speculators on the merger who want to catch a premium. 100 is going to be a psychological level. I think if we break below that, then I definitely think we can go down to 80 or something to that effect in short order, because the sentiment is going to turn against it, paired with the short sellers, paired with the insiders selling. So be cautious on the SpaceX side of things. But 75, I think, is pretty safe.
I agree with you. 75 and below is very attractive there. But I'm going to take the other side of that. I think that a number of Tesla shareholders have pivoted more into SpaceX. SpaceX is growing rapidly, unlike Tesla, with their valuation. Elon premium is a real thing for most of the time for most of his stocks. And I think retail, like especially in the current environment, since it's reporting tomorrow, I don't think that the macro is suddenly going to get really sour again tomorrow. So I think that we might be looking at a scenario, even with not the best numbers in the world, that people are just excited and they want more SpaceX. Yep. They'll put up some actually really pretty numbers, and people won't be thinking too much about valuation tomorrow. We could have a face ripper when they report.
Yep. Yeah.
No position, by the way. I sold my measly 3 shares to buy CoreWeave. Also sold some NVIDIA to buy CoreWeave. Still own an NVIDIA, but yeah.
I think I messed up today, Roy, because when I sold covered calls for CoreWeave, I totally forgot that their earnings is coming up like next week.
Ooh, they're going to be good too.
So I might be a very brief CoreWeave shareholder, option holder for a long time, but brief. But look, man, I think if my CoreWeave gets called away at $100 and I collect $5 in premium from 61 to 105 in 2 weeks.
Yeah, you can't argue with that. And
all right,
you could all, like, if we're looking at like 110, 115, you might look at rolling them out too. Like it's, I don't think it's going to necessarily get like too far away from you into earnings, but we'll see.
Yeah.
Yeah. So, all right, man, I agree.
So let's go into questions, or one more.
Yeah. Let's do that instead of like talking more about like ServiceNow and Palantir. I'll just say ServiceNow is no Palantir. Qualitatively, they're extremely different. If you don't believe me, look at the growth rate.
I don't think anybody is arguing that, my brother. I think it's just a valuation question and taking advantage of that. And I think that's fair.
And that's fair. Yeah. Yeah. And there are buys. I mean, like there is a price that's too high to pay for even the highest quality of company out there. There just is. And there's also like the lowest quality company. There's no price that's low enough for me to buy. So
example, Iron or TerraWolf for one of these guys. Like, I don't think I'd buy them even if they fell 80%.
I honestly, like, there is a scenario where I'd buy Iron, but it'd have to be like left in the dust by CoreWeave and by W's and probably APLD too. And then I might be interested. Maybe. Yeah. Like, leadership's a big thing. I don't know. So
yeah, what was that whole Buffett thing where in the beginning of his career, he was buying companies based on how beat down they were, like the cigar butts idea. But toward as he matured as an investor, he was saying like, hey, I would rather pay a good price for a great company than a great price for just a good company, because of how scarce and how rare that premium is on a great execution which is provided by a great management team. And so these teams, these world-class operators, are a dime a dozen, or they're very, very rare. And once you find these companies, you would rather pay a markup for them because you know they're going to compound for years and decades to come, and not necessarily just chase whatever's cheap, because sometimes cheap is cheap for a reason.
Yeah, that's Palantir and Robinhood for me. So Peter Lynch said it this way, something along this lines, that you shouldn't cut your flowers to water your weeds or something like that. So
Yes.
yeah,
Yes.
makes sense.
With that said, let us start the Q&A period. Unfortunately, we are going to cut questions off at this point because we have 38 questions already bookmarked. Okay. I really apologize for this, guys, but it's an hour and 20 minutes and we got 40 minutes to answer 38 questions. So, Roy, we got to be quick about it.
Yes, sir.
ARR prediction for 2026 next week. I think they'll raise it to 9 to 10 billion. Is this for Nebius? Yeah, I could see it being raised. If not raised, then yeah, I think maybe this quarter they raise the ARR prediction for the end of the year, and then next quarter they provide guidance for 27. We got a donation. Thank you, Chill Wendy, for the $10. Tennis and Spanner show. Thank you. Tanner's not even here, but tennis, I like it. Do you have Bloom Energy position cash secured puts? I have neither. It's interesting to me, but I have neither right now.
Yeah, it is an interesting company.
Did you learn anything particularly interesting from SoFi's IR team? Yes, there's a couple of interesting nuggets, and I'm sure Roy, who also had a conversation, has some nuggets of his own. We had separate conversations, by the way, so the content is going to be fresh. I will be making a video about it, and I'm sure Roy is going to be doing the same. So you're just going to have to tune in for those, Paul. But there was definitely some interesting commentary around, potential buybacks and the tax situation and what we can expect for guidance and how that breaks out. And I asked them some pretty detailed questions, and they gave me some pretty detailed answers. So very excited for that video.
Yeah. And likewise, there's a lot of little nuggets there. Some further clarification on some things. I will give you guys one. I did ask very specifically, because I said I would, why that date? And just like I expected it. It fell best for the company. It wasn't that they were like, let's just man it up and spit into the wind and all that. It's like, no.
Yeah. Do we think we dip again? Matthew Johnson asks. Isn't August usually not a great month? If we don't dip, do we dip closer to October in approach of the midterms? Yeah, I mean, look, July is supposed to be a fantastic month, and we bucked that trend this time around. So I don't think you can really, follow those as religiously as some people do. I think it's guaranteed that we dip again. It's just a matter of when and by how much. Like, the market is not just going to go on a straight line up, and the dips are getting kind of more volatile. And so just be prepared. Have ammo on the side. Unwind out of some levered positions if you're in them. Keep some dry powder. This is why I started this video off with like me thinking about concentrating into quality to be able to weather those storms. It's about how much you keep, not necessarily how much you earn when you're taking the screenshot. How much of that did you keep?
Yeah, I think it's extremely likely that we'll probably dip again, probably within 2.5 months.
Yes.
It happens in bull markets, midterms. Yeah.
Yeah, and also like the Fed decision is going to come up again within that time period. So I think you're bound to get another dip in approach of that. People just take profits, right?
Yeah.
Thoughts on investing in Jersey Mike's? I've never tried Jersey Mike's, so I'm going to bow this one out.
It's the quality. Like, I have gotten an okay Jersey Mike's sub before, but most of the time, man, if you're looking at a chain sandwich shop, it is such good quality. Italian, I recommend. Get it Mike's Way. Get a pepper relish on it too. Man, I'm getting hungry just thinking about it. The Philly cheesesteak also very, very good. I'm a little bit sad that they're becoming public because I've seen this happen before. It's not always the case. Cava, I think, is a nice exception. Texas Roadhouse as well. But oftentimes the focus is just the bottom line for shareholders. And so then you lose some of the quality, and then that it starts eating into your moat of what you have. So I hope that doesn't happen with them. As far as investing in Jersey Mike's, I've had a couple of people ask me about that. If I get some time this weekend, maybe I'll make that a member video. But I've not done my homework on that at all, Kieran. So I can't answer effectively there. I love the restaurant, though. I really do.
Jimmy John is better than Jersey. These are just freaking random
false.
words to me, guys. I live in a village. Please help me get out of here. Help me escape.
Jimmy John's is very good. When I lived in Nebraska, like that was our go-to because we didn't have Jersey Mike's. But yeah, both are way better than Subway, better than a Potbelly, better than Firehouse. Firehouse isn't bad either, but yeah.
Cool. Let's continue. What's your strongest conviction names for the long term, thinking 3 to 5 years out? Roy's going to say Palantir because it's top of mind for him right now.
Palantir, Robinhood, CoreWeave. Yeah, Robinhood right there. It's reverse. There you go. I mean, Nebius would be up there too. I'll give you 4 names for over 3 to 5 years. Yeah.
Yeah, I mean, I think Amazon, Meta, and Nebius are all great picks. Let's throw in SoFi just for
Yeah, I was gonna say if we keep moving down, I was like SoFi and Figure and Venture Global and just name my book.
Any idea what the headcount is for Toronto meetup? No, I think maybe around like 50 people. I don't think. I'm not sure. Yeah, Tevis lives in a cave called Canada. Yes, I did. I do. Are we still holding 33% of your BMR? If so, what would make you offload the position to repurpose the dough elsewhere, in for the long call or on that final 1/3? Yes, I do still hold BMR. Let me actually check for you guys what percent of the port it is for me. BMR is 3.5% of the port. So it's not nothing. It's 3.5% of the port because I'm down like over 50% on it.
Yeah, it's like mine. I've trimmed and sold some, thankfully some in the 30s, and then the most of the rest of my portfolio is on this, while BMR does the opposite. So
I think if and when BMR goes back to $30 and I can actually sell some at break even, I probably will like massively unwind that position and take a hit on the opportunity cost or whatever. And I'll probably hold a portion of it for longer. But yeah, I just think the sizing of the position was something I was like super uncomfortable with. And even what I have right now, I'm like semi uncomfortable with. It's definitely hurt me from a returns perspective, but I don't think I would be selling out entirely. I would just be reducing significantly. How about a completely new sector? Yeah, I mean, I don't know. Any sector?
the hard thing is, I know it can be interesting and fascinating, but at least for me, it takes me a long time to do my homework if it's something I'm unfamiliar with. Like air test systems last summer, automated testing equipment was not something like I knew it existed, but I knew almost nothing. I didn't know much. I have heard of Teradyne. I'd never heard of Advantest, and it was just wafer level burn in and package. And I was like, okay, so it took me a long time. And there's some, like if it was biotech, I don't know that I can ever spend enough time where I'd ever be comfortable buying a stock versus like an ETF. So sometimes it just makes more sense to invest in where I think usually it does.
I bought shares for both Rocket Lab and CoreWeave because when we were dipping on Wednesday, I was like, I'd rather be in shares right now. I think this is a big enough discount for me. And
Nice.
I was like, let's not mess around with it. I already have cash secured puts in CoreWeave. So now I have $70 CSPs for October, $90 CSPs for October. And then I have the shares as well as $120 leaps that I bought for January of 2028. That's like fully transparently what my position on CoreWeave is. Overall, all said and done, CoreWeave is probably around like 6%, 5 to 6% of the portfolio ish. So, yeah. When will SoFi get added to the S&P 500? Maybe September, maybe December.
Yeah, I think it's likely.
Yeah, I think 2026 is definitely a good possibility. Do you think the unwind of the Japan carry trade is a threat to high beta trades?
I think very small. We saw, of course, the impact of this being sudden and unexpected in the yen carry trade day, August 2024, 2 years ago, exactly 2 years ago, not quite to the day, but Palantir also reported earnings that day. It was on a Monday. I think not much though, because it's a known event of what's happening, and B, United States to the rescue. So there's a reason why it's not out of the goodness of the heart of the United States, maybe a little bit, but Japan is the largest owner of Treasury bills, and so they want to make sure that Japan is not dumping those on the market either. And so this is real. Reuters captured this on his. This is Scott Bessent's notepad to do buy Japanese yen 5 to 10 billion. So no, the United States is there to support that fiscal policy. I don't think it's going to collapse or anything like that. I mean, I could be wrong, but I don't think this is yen carry day 2.0.
Please rank your Wall Street movies top 5. This is a tough question. I would say number 1 for me is Margin Call. I watched that, like, I've seen it a scary amount of times. Big Short has to be up there.
Oh yeah.
I think the Wall Street movies have to be up there. Maybe we'll just put the first one up there and not the Shia LaBeouf one. So that's 3. I think Boiler Room has to be up there.
You like Dumb Money?
I
I
would
like Dumb Money.
I
I thought it was a good one. I'd say it top 5 for me.
Really?
Yeah, I did. Yeah, I mean, I know Vlad personally, so I kind of hated part of it, but yeah.
What else is like
It was
a
entertaining.
fancy?
Wolf of Wall Street's one that's commonly cited. That is one that I've had to skip scenes, but I did watch.
Wait,
It
you
was
had
entertaining.
scenes? Why?
I'm married, dude. There's a pretty explicit scene in there that I'm just not comfortable watching with the whole family, you know. So
Oh, obviously not with a family, but like, okay,
I'm
I
able to
get it.
watch it on my own. Yeah.
Okay, I get it. Yeah, like I really love the subtlety of Margin Call.
It's a good one.
If you
That's
don't
probably
know
my top one.
what's going on, like the gravity of the situation, because they don't really flat out explain much to you, and it just happens, and it's so quiet. It's such like a low budget film, but like the entire time there's tension, and it's very exciting.
Yeah, I think that's probably my top one. Is that yours?
Margin Call is my top one, I would say. Yeah.
It's so good. Yeah, I need to see it again. It's been a few years.
Yep. All right. Yeah, the meeting with
To
the boss,
do buy 5 to 10 billion in yen and watch movie Margin Call.
preferably at the same time, honestly. Yeah. What caused the pump across the market today? I can't imagine it was Trump. I think we answered this.
Yeah.
Can you and Roy give each other a 90-second elevator pitch selling each other on Nebius versus CoreWeave? I mean, I think we've done like this is like 10 minutes of each of our shows every single week.
Yeah. Pretty much.
Oh.
Including going back to Data Center Monthly, which Tevis was our guest on. So.
Yeah. So definitely watch our other content.
Yeah, but bottom line is we both agree, like they're great companies positioned in a very great space, and they're both leaders. Nebius is probably the highest quality, but when people say bare metal is junk, they're wrong. They don't understand how hard it is and how good CoreWeave is. They criticize at the top, oh, it's mostly finance guys. That's what you need to be able to master the supply chain logistics, the debt, the bonds, all of that stuff. But they've also hired an incredible engineering team. So don't sleep on CoreWeave, but also don't sleep on Nebius. And I think you can invest in one, you can invest in both. I think you're going to be very happy.
Yes.
Any thoughts on why crypto didn't run today with all the other risk on assets getting pumped?
I didn't
Couple
even know
thoughts.
this, to be honest.
Exactly. Number one, AI is the new crypto. Number two, Jim Cramer says he was selling all of his Bitcoin. So that's a generational bottom that you guys have to mark on your calendar and start buying up Bitcoin. But yeah, other than that, I have no comments. Oh, maybe it's because Clarity is not looking likely. I have to make a BMNR video that's like long overdue, but basically it's not looking likely that Clarity is going to be moving forward in August. So that could be one of the reasons why crypto is not getting the love.
Yeah.
Do you have a good system for paying capital gains tax each quarter, or do you just pay the penalty on tax day?
I haven't had to pay a penalty yet, despite
Each
really
quarter?
nice. In the United States, usually yes. If you have substantial capital gains tax, or I think it falls under the same umbrella as self-employment that you're supposed to pay on a quarterly basis here. Is it 941s? It's been a while since I've been had my own business, but yeah, usually you do quarterly filings, or you're going to pay an interest penalty on tax day because of what you should have been paying on a quarterly basis. For me, it's not been an issue, even though I did have the massive gains one year with Palantir, but I had a lot of offsets, and a lot of it was very deliberate, like buying the EV, and we had the EV tax credit and those sort of things. So we still had to pay some taxes, but I don't remember, like, if there was a penalty, it was pretty small. So and this year I do see a question on like what are my gains this year. It's a little bit above the S&P 500. Realized gains are not really that much. I did realize some on air, but I also harvested some tax losses on PayPal and on HIMS. Well, actually, HIMS was up. I'll have to double check that. But no, I think that if you're in a position where you're realizing quite a bit in capital gains, talk to an accountant. It's going to cost you a little money up front. Those guys are very good at what they do, especially if they specialize in that. And usually the amount that they will save you because of something you didn't know is going to be a lot better than whatever amount you pay them. You pay them $1,000, like you might save 10.
Yeah. Can you explain the difference between Rocket Lab and SpaceX? Are they competitors, or do they do different things? Yes, they are competitors for many, like for launches, and they do different things in the sense that SpaceX does much more. Like they have the Starlink business, they have XAI, they have a whole bunch of other business units, but they are competitors in the launch business.
Yeah, and SpaceX is just a massive conglomerate at this point.
And my
cursor now.
My understanding, and I'm sure if Matt is in the chat, he'll correct me, but my understanding is that Rocket Lab is like for lower payloads versus SpaceX is like heavier payloads.
Neutron will change that, and I don't remember how that offering, like as far as payload amount, differs with what SpaceX launches, but it is their heavy payload. So, and it's been delayed a couple of times. I've not kept up enough with Rocket Lab to know where they're at on that, but it is coming. Yeah, I would say Rocket Lab is more of a pure play as far as vertical launch.
I would agree with that. But I mean, look, if you want exposure to AI as well as space, then SpaceX is your pick.
Yeah.
Okay, let's continue. Hold on. How often do you thank TJ for walking you through options? Also, you should repost those videos. Was very valuable to the noobs. I wasn't far into it then myself, but that took me over. Yeah, TJ has been like instrumental. I text with TJ all the time around options specifically. Like he is still the GOAT when it comes to selling options to generate premium. If you guys are not following TJ, then I highly recommend it. Very, very thankful that he pushed me in that direction for options when he did.
He's a very, very real, authentic, down-to-earth guy too. And yeah, I was in options already before TJ, so I didn't learn from him, but he helped reinforce some concepts, and he does it a little different than I do. I I do it for a cherry on top but yeah, that's what he does is sell options. That's how he makes a living. And it takes I don't know. Yeah. If you're interested in that, follow him.
Yeah. Is Nokia going to rally soon? I mean, I hope. We'll
think
see. You had a bunch of insiders buying it in teens. I mean, Nokia for me is like a 1% position. I think it's like super tiny. But yeah, it's completely just tanked. I was buying it. I think I like averaged down at 13 and it fell under $9. So I was like, oof, that's not good. Yeah.
Yeah,
Nokia for me is 0.5%.
I drafted it, so I'm rooting for it from the sidelines, but kind of not really. This, by the way, I'll throw this up. I don't know if you've done this before I tuned in. Current
No.
standings. So this has been very volatile. I'm still down. We'll look at why in just a second, but let me just throw up Tevis's here. Massive swings in a lot of these names. You're still up really nicely on Service now. It's up 10%. And you've had big winners really late in your draft and just one really big loser, which is T1. I guess Hood has been close. It's down about 10%. But yeah, look at that, man. Pick after pick. You're like SMCI, Ondas, Iron, Penguin, and I don't remember what that one is. Yeah. Oh, no, this was the under 1 billion. Yeah, you killed it with that one. This was the short of Penguin, not the long. And so like your last three, which are kind of like utility picks, it's really helped you versus mine. AMPG, it's the under a billion. I don't know much about it. I looked into it for maybe like 20 minutes. Yeah, that's taken away almost 2% from my portfolio. I've shorted Axon, and it is, of course, up massively. And then Bumble was given to me. I had no choice in that one, and it's actually not too bad. But yeah, that's the difference versus me being number 3. Tevis would still be crushing, and Nate, of course, too. So, yeah. Thank you for building that. And this guy right here also is starting to post on X a little bit more. So if you're in CoreWeave, follow
him. Is TJ still in BMNR? Yeah, he is still in BMNR. And I put TJ's handle in the chat for those who are asking what's his ID. Let's continue here. TKO reported today. Do you have any interest in that stock like Steve? No, I don't know what that is.
Take Two. Yeah, it's the
Take Two.
Grand Theft Auto. Right?
No, it's TTWO is Take Two Interactive.
Oh,
TKO is something else.
That's the Dana White one.
It's like the UFC. Yeah. I don't. Maybe, but
I don't know anything about that. So yeah, no, not really. I just pulled it up. They're growing 25.86% year over year. That's not bad. Looks like a massive beat on EPS, but yeah, I don't have really any interest there.
Yeah. What's your year to date, Roy?
It's
you don't have to share at all. I can skip.
Yeah, it's been around S&P 500. I will say, I actually was negative year to date intraday on Wednesday. Just CoreWeave had tanked, and a lot of the other names that I was holding had tanked so hard, and I was like, I went from being up decently well to like negative. I'm like, man, I didn't see that happening, but okay. And of course, we know what happened Wednesday night, Thursday, Friday was okay, and then today. So I'm up like insane. I think it's probably honestly, Tevis, the largest swing within a week that I've ever had by percent to my portfolio, and that's including AMC squeeze day. Maybe not, because that was like a 2-day event back in 2021. But yeah, it feels like I'm holding like meme coins at this point, because it's like, 5 days later I might be up or down 25 to 30%, and that's without double or triple leverage ETFs with just a little bit of options. It's crazy.
Yeah. Is it dumb to be 100% Nebius? Depends how bullish you are on Nebius. Man, ask Nate, because I think he's 100%.
If you have a very sizable portfolio, and let me put it this way: if you've already won, you've hit your retirement numbers, or you're very well into trajectory of that,
Yeah.
Why would you take the risk? What's the goal? I would be very careful with that. When you're set for life, allow yourself to be set for life. When you're set for retirement, allow yourself to be set for retirement. And a way to not do that is to be 100% anything other than like S&P 500. Now, if it's a small portfolio that you have, you're just starting out, you got $2,000, you have money coming in all the time. Sure, why not?
Yeah. Which one of you will jump back into HIMS first? I think it's going to be Roy, honestly.
No, Tevis.
You don't think so?
No, it's not going to be me.
All right.
I mean, like, it's not impossible. You're not saying it's impossible that you'll ever get back into HIMS, and I'm not either. But yeah, there's just so many obvious buys, at least in my mind, in the market, and some that I own and some that I don't yet, but I'd like to. HIMS is not one of those. HIMS is interesting because of peptides, but I don't trust the leadership very well, and I'm just, yeah, it would have to go down. Yeah, I'm not.
Yeah. Titus, why are you not drinking Celsius? It's August, man. I'm not drinking energy drinks for August, and I had
love it at night for you.
Had a trusty water in this stream, so that sucks. And I'm gonna do a little home workout right after this. But yeah, my August challenge is no alcohol, no energy drinks, and a small workout every day. So we'll see. Do you have a safe, broader market portfolio along with your high beta portfolio? No.
Yeah, I do. It's probably about a third of my overall retirement stuff, and I don't even look at it very often. Maybe once or twice a year, and it's just boring S&P 500 stuff. It's what'll enable me if I blow up. Well, it enables me to be more aggressive because I know it's there.
Can you see the S&P in a correction around midterms? Yeah, possibly. I mean, there's going to be more uncertainty, more volatility. Depending on how midterms goes, I'm sure there's going to be trades around that as well.
Probably not a correction, but a pullback.
Yeah. Yeah, not a correction. I think correction is a big word.
Yeah.
What do you think about Chris Camillo? Is it gambling or strategic to go all in on Amazon weekly calls before earnings? The weekly calls part, I think, is more gambling than it's more strategic. Look, I know Chris goes heavy onto his conviction picks when he thinks he has an edge. Generally, like 30 to 40% of his portfolio, maybe higher. But on weekly options, it's very risky. So the risk to reward ratio is incredible there. I would never be comfortable enough to do that. Now, if he went all in on Amazon before earnings, then I'd say it's strategic. That's fine. Or even if he went all in on Amazon leaps before earnings, I would say it's fine. But on weeklies, I think that's where the risk tips over the reward, even if you think you have an edge. And it worked out for Amazon in a big, big way. And so I'm very happy Chris made money. But it could have just as easily gone the other way because the market is unpredictable with the fits that it throws on an emotional side, regardless of what these companies report.
Yeah, I mean, you can take a different company, Micron, a couple of quarters ago, that just destroyed earnings, and it tanked. And it was trading at like, what was it, like a 6 times price to earnings, maybe less. Current and like forward was even lower. You'd look at that and be like, well, this is really rational. But there's that saying for a reason. The market can remain irrational longer than you can remain solvent. It's especially true if you do weekly call options. So, yeah, the dude, like, congrats to him, but that is gambling.
Yeah. Yeah. I really believe Amazon hits 350 by 2026. What do you think? I think 360.
That's this year.
Yeah, exactly. I think 350 is a tall order by the end of this year. I think with Kathy Wood buying like millions of shares of Amazon over the past week and Jim Cramer saying it's time to buy Amazon, like I think we're going to have a little bit of a short-term pullback from this price. People are going to take profits. I mean, you hit all-time highs. 300 is definitely within reach. Maybe not next week, but by next month, sure, I could see it. 350, I think, is a tall order. Now, look, if it does hit it, then I'm going to be selling my spreads because those are going to be very profitable. Yeah, Jeff Bezos is also selling Amazon shares, so that's going to be a lot of selling pressure put on the stock as well. So all of these factors, I think, will play a part. You could make an argument that people are going to concentrate more into the hyperscalers for relative safety, and that's going to drive Amazon higher. But don't forget, if you were asking me this last week, it would have been ludicrous because Amazon was trading at $230. Sentiment can change at the drop of a dime. It's just a long distance to close for a name that's not as high beta as a lot of these neo clouds are.
Yeah, I think they did probably the best job out of all the hyperscalers, and really 3 out of the 4 did very well on this, of demonstrating the ROI on the CapEx spend and what the strategy is and how it's benefiting them internally and externally and longer term plans. Really impressive earnings call itself. Earnings were good too, but I would say probably it's not going to hit 350. Not this year. Like if you're saying 2027, yeah.
2027, absolutely. But 2026, I would love for it to happen. Don't get me wrong. I just think it's a little bit out of the range of probability.
Yeah, you'd end up with Amazon above 50% year over year, like year to date. I don't think it's done that since 2021. So yeah, I'm going to take the under.
Yeah.
2020, yeah.
What's your SoFi price target by end of 26? I think I said, what did I say? $40, I think is what I said before.
Yeah, I'm not going to repeat mine because I just keep it the same. So it's not happening.
I mean, yeah, like, I don't know.
I mean, yours is not impossible. And I do think that the fintechs and the finance names will do great that last quarter, which we're not that far away from. SoFi is getting closer to the 20s again. Entrance into the S&P 500, it's growing 40%. I mean, it's not nothing. But rate hikes, yeah, it makes it tough.
Yeah. I have no thoughts on Bloom.
Yeah, it's an interesting company. It's one of those many ways, but it's listen to the Nebius earnings and what they say about Bloom. That's going to be interesting, and I know that you'll be listening to that live, especially with that Vineland campus. It sounds like Bloom is being contracted because they can't get approval for these Bergen engines, which is really good for them. For Bloom, like the one thing with Bloom is I don't know about the short report. I think it's worth reading. Some short reports are just not. And maybe people that know Bloom a lot better than I do, or about Scandium, they might say, hey, it's just a joke. I don't know that much, but what I read is like, it's worth considering some of these things. I'm not sure about their sourcing at Scandium, ex-China, but yeah, it's a good product.
Yeah.
A few more questions.
$40 for end of year for SoFi. I doubt that with all the potential rate cut. Yeah, look, man, like I want to bring up this. All the first half of the year I heard on YouTube was rate hikes were not going to happen. They still haven't happened, by the way. Put that non-financial advice banner up. Yeah, look, rate hikes still haven't happened. I think if we get the hell out of this Iran thing, if the inflation numbers come in well, it's still a toss-up between September to get a rate hike or not, right? We could just as easily be in a situation where we get a pause in September, and then you're at the finish line essentially for the end of the year to potentially have no rate hikes. That's going to be a better macro environment for SoFi. Number one. Number two, don't forget that there is S&P on the table at some point towards the end of the year. Number three, don't forget that their EPS is entirely backloaded. Just to hit their guidance, they need to hit 18 cents of EPS. So they're going to do a lot of ramp up in terms of their numbers over the next quarter or so. So that mixed up with everything else that's going on, it can cause a change of sentiment. Now, do I think $40 is a stretch? 100% it's a stretch. I'm not going out on a limb to say my base case is $40, but if it passes $25, I think you're going to be a straight shot for new all-time highs. That's just what I think from a technical setup perspective, plus from a catalyst perspective. There is still time on the clock, guys. There's 5 months left, and there's a lot of catalysts from here until there. So if the macro environment turns out to be better than expected, which it very easily could be, then I think this thing is going to go much higher. And there's recency bias. I've talked about this in the past. People look at what the stock price has done over this past several months, and they think that's what it's going to do for the next several months. That has been proven wrong time and again. That's why I'm buying opportunities like ServiceNow and CoreWeave and Rocket Lab, because if Rocket Lab has fallen from $150 to $61, chances are it's going to revert back to the mean, and I'm going to catch a nice, healthy little rally along with it. Same thing can happen for SoFi in very short order, and it's going to catch people off guard when it happens. And when it happens, remember this clip and remember these words, because $40 might, at some point by the end of September or the end of October, seem within reach, whereas today it seems completely fabricated. That's all I'll say.
Yeah.
All right. In your opinion, at current valuation, how attractive is each of the big three neoclouds at current valuation and prices? CoreWeave number 1, Nebius number 2, Iron number 3, in terms of how attractive they are relative to valuation.
Correct.
Would Tesla board ever reject the merger with SpaceX? If so, why would they reject it? Roy, I'll go to you for this.
I mean, it just depends. I'm sure that most of the board members also own some SpaceX, but they may not be as much. And so they are going to look at it purely from the lens of Tesla. And so depending on how that merger works, if they feel like Tesla's getting the short end of the stick, they're going to not allow that to happen because it's not in their best interest nor the Tesla shareholders. I think realistically, though, I mean, that would be one of those talking points where they'll figure it out as they go along. So very unlikely that they reject it, but it can happen.
Yeah, I think it's going to be accretive for both parties. And then Elon is a major influence from a amount of shares or voting power that he holds for both companies. So that's going to push through as well. It's going to be an uphill battle to reject this. And look, we've seen with Elon's pay packages multiple times, even after the judge revoked them, that the shareholder base had his back. This is one of those things where if you're trading a company based on the story, and the story hinges on a key man risk, in this case, Elon, then chances are, even without Elon's shares, the base is going to vote him in to merge with SpaceX if that's his recommendation, because he's the reason why these people are even in the stock in the first place. I have no horse in the race. I don't own neither Tesla nor SpaceX. I just think that knowing that shareholder base, it's more likely to happen than not. Cool.
It sounds like it's not going to happen anytime soon, though, from the earnings. So
we'll see. Are we expecting a pump from CoreWeave? It was up 20% today and like 13% the day before. What are you saying, pump? Like, hold on.
I think you might be referring to earnings.
Oh.
So, yeah, earnings next Tuesday. I think that there's a good chance that we do, but it depends on what the market's looking for. If it's the backlog, specifically if it's the annual run rate, yes, it will pump, and it's way too low right now, and it shouldn't be here. And they're going to blow it out of the water, especially on the backlog, but also I think on the revenue side and the annual run rate. If it's debt, they will add debt. That's what they do. And so if that's what the market is most focused on, then not necessarily. But yeah, I would tend towards yes at this valuation, which is laughable. So
yeah, it's like
I also think like there's
24% in 5 days.
Yeah. And maybe it's just me, Tevis, because I know it's kind of like once you buy a certain type of vehicle, you see it everywhere.
Yeah.
But man, there's a lot more people focused on talking about and invested in CoreWeave than ever before, from what I've seen, except for IPO.
That's just because I'm invested in it and you talk to me like 3 times a week.
That's true. Yeah, I talk to you more than my wife. No, not really.
Well, I am probably more fun to talk to. Okay. Less important to the family, more fun. Um, what's the load the boat price for Figure?
That's a good question. I mean, it's screaming by right now. Maybe 20 and under. Like, it's hard to see it do that. They're going to put up numbers again that are growing around 100% year over year. Very, very well vertically integrated, very well positioned, but where they're trying to grow in the most, which is first lien, the mortgage market, it's kind of dead right now. It's the right time to build something, but I don't know if the market's going to be excited about that. So, like, if you're looking short term, you know, it can be chop for a little while. If you're looking out 5 years, yeah, I think this is a great price. Do your own due diligence, though.
Thoughts on Netflix and Starbucks, even as a hedge?
Yeah, not too interested. I mean, like, Netflix. I think Brian Nicole is quite the CEO, and I think the next time, if there's a next time before retirement, that he goes into a different company and is there as a turnaround story. I mean, he's done it twice, so what, or 3 times actually, and so a fourth time it wouldn't surprise me either. So, but yeah, I don't really like Starbucks, so it's one of those where it's hard to invest in a company that you don't really like. Netflix, I do, we're subscribers and everything, but I don't know about that model. It seems like it's moving from a growth company to a valuation or a value company, and we'll see if they can break free from that somehow. But I think that the merger and acquisition that didn't go through was that, and so I don't know that I want to invest them as purely in a value play. That's I know I invested in PayPal, but I'm really a growth investor, and I really thought that Alex Chris could shift them from back into growth, and I think he might have given enough time, but yeah, I don't have that hope with Netflix.
Yeah, he did.
I don't think he did. I think that Chipotle, like, he was there for a long time. I think if you're giving him flack for the last year or two, I think you got to give him a lot of credit for him coming in. Like, they brought him in for a reason, to do the exact same thing. So
it is getting late. You're absolutely correct. And we just so happen to be over the 2-hour mark, which means that, everybody, we really appreciate your time on this Monday night. We got to think about the Bootleg Weekly name, apparently, Roy, because people wanted us to have some alliteration type of name, like Market Monday or Money Monday or something like this. Moonshot Monday, I think, was suggested. So we will think about it. But until that time, thank you all so much for watching. After 2 hours, we turn into a pumpkin. Yes, that's absolutely correct. And we'll catch you guys on Fiesta Friday at 6 p.m. Stay tuned to both of our channels for upcoming videos with our exclusive chats with SoFi IR and the insights that they had for us. I'm sure Roy's going to make a video on Palantir. I'm going to make a video on BMNR at some point. And yes, I will make a video on options for the members. Thank you all so much for those of you that are members. And have a good night. Talk soon. Bye-bye.
later, guys.